For months, oil watchers have seen the steady decline of prices. They've now hit a record-making 7-month consecutive low. Now, given these dismal prospects, is there any hope for a Brent benchmark bump up? Oil markets expert Gaurav Sharma joins me with his thoughts. Gaurav, now it's the big question on everybody's mind. Are we going to see a bottoming out of prices?
Interesting times. I would compare it to sort of a skating ring analogy, that we'll have a lot of to and fro. We'll see the oil price fall further, could fall below $40. Then we'll have a sort of stabilizing in the range that we are, somewhere between $40 to $55. This sort of situation will last probably up and until the summer. And then what I see from there on is a supply correction kick in.
How low are we really going to go?
The way I see it, we could go as low as $35. Now, what's happening at the present moment in time is we have the three major producers, the States, the Saudis and the Russians, all collectively pooling up to about somewhere in the region of 30 million barrels per day, in excess of 30 million barrels per day. Here we are, we have this supply glut, and the way I see it is driving prices down, but this cannot be sustained. This cannot be sustained in the long run.
So who's going to prompt this change among the big players?
I think it's going to be the Russians, because the Russians are suffering from a double blow. They're suffering because of the sanctions, then the oil price is going down, and of course, the sanctions have resulted in a lot of their international oil and gas partners, the likes of ExxonMobil, Shell and so on, from sharing their technical know-how. Now, if you take all these three factors into account, I doubt that Russian production can be sustained above 10 million barrels per day.
Let's talk about some of the overarching macroeconomic realities that we face right now. Christine Lagarde, head of the IMF, is warning about a drawback on investments as well as consumption. First, can you tell me, are oil prices responding quickly enough?
I would say perhaps with near 70% certainty that the oil prices are currently ahead of the curve. It is a big bonus. Now you cite the IMF chief, and I would say that the IMF itself and the World Bank and the OECD and several independent analysis organizations have sort of observed that if you look at the positive effect of declining oil prices, it could add up to sort of 0.5% to 1% of GDP, especially to some of the emerging markets who are heavily reliant on oil and gas to power their economies. It's disputed. Everybody comes up with a different percentage, and you know, data is always, I mean, the projections are forward facing, but the reality is always looking backwards.
Given this reality, what then does it do to commodity prices?
The way I see it is that if we go back to the pre-financial crisis years, you looked at a basket of commodities and they were all towards the upside. Then of course we had this financial tsunami in 2008, 2009. The whole basket of commodities, oil including, nosedived. Then we had a very interesting event. We had the Chinese giving their own economy a massive $400 billion sort of stimulus. What happened that time was that the whole thing got flagged up again. We had again a sort of a mini bubble. This correction should have happened 5 years ago, but it didn't. And again, the sort of leading voices were out there calling it, oh yes, see, here is the commodity supercycle. I'm very skeptical about that term. Why can't we just call it an ordinary cycle?
So oil, then of course, is only one of many indicators on commodities. So why are we hearing forecasters weighing so heavily on the impact of the slump in the market? It's sort of a misnomer, wouldn't you say?
I would say so, because another thing is oil gives a lot of market commentators the pretext to sort of appear to be a little bit more shocked than they ought to be.
Let's talk about it. I mean, oil market watchers get paid to talk about how important their industry is in the larger scheme of things. And yes, of course, it drives markets forward. But when there is this overemphasis, what sort of implication does that have? Don't you think it sort of misleads the public in many ways?
Absolutely. We talk about all the upheavals in the oil market. But I can tell you for a fact, oil is one of the easiest commodities that you can trade on the market. You only need to fork up a price of about 10% of a barrel. You can buy as little as 1,000 barrels. So let's say even at today's prices, you can probably put a bet in at about $500.
The million-dollar question, Gaurav, let's leave you with this. Will the price fluctuation that we've been seeing in the oil markets make for a more bullish or bearish 2015?
I am still overwhelmingly bearish. I would still say we will sort of have this fluctuation between $35 and $55 as far as oil is concerned, all the way up to June. As I said earlier, I do not see the current levels of production being sustained, and that will definitely have a bearing. We will see some of these projects. I mean, if you look at the independent upstarts in the States, you look at some of the Russian projects, you look at Arctic, you look at Brazilian deep water, some of these projects were not even profitable at $100 a barrel. Now, if these projects could not be sustained even at $100, how do you think it's going to be sustained at $50? So there will be a correction. We'll see some of these projects being put on hold, some of them being financed at a massive premium. All of this would be sort of price positive as far as the direction the oil price goes, because it will create a perception that less oil is coming out of the market, which isn't the case right now. Right now, everybody thinks we're just awash with oil, which is pretty much close to the truth.